Welcome back to the channel. My name is Brad, and today we're going to look at how much did I make at the end of February, beginning of March, from my covered call portfolio. If that's what you're looking for, stick around. Like I say on all these videos, I hold a lot more than just covered calls. I have 5 pillars. I believe in business development companies, preferred stocks, alternatives, and CLOs, as well as my covered calls. I use the 5 portfolios. So going into February, I have a complete portfolio, and we're just going to talk about the ones up in the red, just my covered call section. I'm not going to share everything else with the whole entire internet, but members get to see a live spreadsheet. They get to see all my holdings. They get to see that I'm down, but they also get to see how much revenue I'm making every single month off of all of my portfolio. Just don't want to share it with the world. I do share that with members. So things to think about is diversity. We've seen a little bit of market downturn, but having business development companies, those preferred stocks, some of those alternatives, except for my Bitcoin, senior secure loans and CLOs, well, they held up pretty well during the downturn. So it's not like I'm taking huge crashes on everything. Some of my cover calls are down more than others, but hey, I knew that going in. But let's talk about income. So going into this month, what I have going in is I added GPIX and GPIQ. Just what I added to it. And I'm taking that GPTY and just taking all the revenue from that and investing it in other things. That way I can build out other funds over time. Now, one thing I truly believe in is I truly believe in the higher the percentage, the farther the downturn. So I got AIPI and it's paying up there at the 34, 35% range. And it's taken a huge hit, 15%. But I'm still going to be able to collect my 8% for a long time, even with the downturns. And will it recover over time? Slowly but surely, it'll go up in a great big bull market. But in between time, I can DCA my way down and get lower and lower cost bases as it goes. And I can still collect my 8% so I don't have to go get a GOB. And Brad, what do you mean? Let's walk through an example of this. If I have SPY and my SPY is at $49 and I can handle a 33% downturn. That means SPY price can go to 33.21. And what do you mean by that, Brad? That's confusing. At $33.21, and they usually get about 12% premium. That is $3.98. If I looked at $49.79 at 8%, because that's what I'm trying to live on, I would have been at $3.98. So you can see over the long term, I can handle big downturns in the market, because you never know what the market is going to throw at us. You never know. And you never know what might change or what somebody might say and cause the market to crash. I also believe that you should have non-correlating assets. And this is off of Portfolio Visualizer. You can go out and look at non-correlating assets and take a look at how the correlation of those assets are over time. But here it comes. You guys really want to know, how much money did I make? Well, this month I made $8,078.13. I used $3,518 to live on. I take that other $4,500 and reinvest it either back into those funds or into other funds. Members get to know exactly where I reinvest it and what I'm buying. Now, let's take a quick comparison between last month and this month. Well, January I was at $8,500. This month I'm at $8,000. I used about that $3,500, $3,600 to live on. and you can see what I've reinvested back into the funds. Now, one thing I did, my covered cost base, and I base this off my base, not the worth. My covered call base was reduced from January to February by 1.5%. Yes, I sold some of my covered calls when they were in profit, and I took it out. And I took out some of the higher payers. So I sold a little bit of FEPI off, and I moved it into other funds. Good, bad, or indifferent, that's what I did. I moved it into other funds to diversify my portfolio a little bit, and I will continue to do that. I will continue to sell off some of the funds when they get into profit just to diversify my portfolio so I don't have to worry about downturns. Now, I still do believe that some of the higher, bigger payers is going to have a little NAV erosion over time, but they also have the opportunity to recover over time also. So just don't get thinking of 1 day events or 1 week events or 1 month events. This is a long-term strategy. I just don't go buying funds every single day. I don't go out doing a bunch of stuff. Matter of fact, weekly payers are probably the biggest pain that I have. That's just because I budget monthly. I don't budget weekly. And if a daily payer comes out, what am I going to do then? Am I going to go in and buy every single day? That gets ridiculous. So those are my comments on that. I just look at this as a longer term play that I don't have to go buying funds and buying different things and jumping from here, jumping from there, moving around, chasing things. I don't know what people are doing every day, but I look at these and say, hey, I can live off of what I'm making, and I make significantly more than I need, because you should be making about 30% more than you need. So if you need $10,000, you need to be having $13,000 come in. That way, when there is a downturn, that percentage may go down a little bit and your income may go down a little bit, but it's still well above what you will need so you can reinvest a little bit over time. You should also have a cash reserve. I have JAAA where my cash is sitting. I also have a nice little bucket in my just regular cash, just sitting there. So I can buy on ex-dividend dates. That's what I end up doing. That's what I made myself do, is I try to buy on ex-dividend dates or thereabouts. I also make sure that I get all the drips. So if it's a closed-end fund with a special drip, I ensure that I go out and make sure that I get that special drip, because I've been doing that for a couple months now and actually monitoring that a whole lot closer. And I sell off of those special drips when they actually come in, because ex-dividend date is in the middle of the month and I get paid at the end of the month. And what I've noticed is by the time I get to the end of the month, I receive it and get that special drip and I sell it, I am clearly selling at a profit on top of my distributions. So EIC as a 14% payer is actually getting me a whole lot more than 14%. So until next time, God bless.